AT&T stock is down 25% year to date. So should you be buying more shares? Hey guys, and welcome back to another video here at FiscalVoyage. My name is Felix, and today's video we're going to talk about AT&T stock. I actually did a video sometime last year. We're going to go over that video and see where it is today, as well as determining current prices if AT&T is a better buy since that last video. Currently right now, AT&T has a huge yield of 7.17, which is outstanding. And it's a very safe yield because we're going to look over the free cash flow as well as adjusted earnings to determine if that yield is still covered by the earnings and free cash flow. But before we get started, if you're new to the channel, make sure to hit that subscribe button and also check out the description below that I have a free ebook of 5 quick metrics to look for before spending more time and hours in research any particular company. So let's get started with AT&T stock. So you see here on July 15, 2019, I made a video on AT&T. At that time, on July 15, the company was going for $33.71. I had a fair price of $42, that means undervalued at 27%. And I gave it a buy recommendation on July 15. So if we go to that time period, you can see here, which is about, this is the monthly closing price. So it was about $33 and let's check it here, $33.71. So we go back, $33.71. So around here. So we go from here. So you can see at that point, it was very up nicely before the pandemic and the economic shutdown. It was up almost 12% for capital appreciation, and then plus the dividend and such, you had a total return of almost 16%. So that was good there. But because of the economic shutdown and things, actually right now AT&T is at a great price because since then it's down 13% capital and 6% total return, of course, because in this time period you've been collecting dividends. So that's not too bad actually. And if we look at the year to date, the company is actually down 25.4% since year to date. So that's a big decrease in share price, 25%. So to me, this gives a great opportunity to purchase shares of AT&T. And a note with AT&T, you can see here it's going for $29 a share as of Friday closing price. And let's look at their most recent news. So on August 28th, there was an announcement here, AT&T exploring a new sale effort for DirecTV. DirecTV, the company paid $49 billion in 2015, and analysts are estimating that it's worth now $20 billion. So they're taking almost $29 billion loss there. But I think this is pretty good news because of the fact that it's going to help lower their debt, because I think that's what's one of the big reasons that this company is lagging behind or staying down in the 30s or low 30s or high 20s is because of their debt. So let's go more in depth with the FastGraph here for AT&T, and you can see here in the beginning 2000 the earnings was erratic and the valuation was very bad. Here AT&T had a PE of 20 or 21. And you can see here the price was following the earnings of about 12, and then it started to pick up, and then the price was starting to follow, and then it dropped again, and then the price dropped again. But now, since 2009, earnings has been growing quite nicely here, around 6% or a little 4% and such. But remember, you're getting a very nice dividend. For example, now you're getting a dividend of 7.17, and let's shorten this time period. And you can see here as Friday closing price at $29 is very attractive, because if the price were to revert back to a normal PE of 12.4, you have a total annual rate of return for the next 2 years of 22.9%. So that's tremendous growth on a high yield company. And not only the fact that the company has high yield, because a lot of the time when a company has high yield, you look at, can they even afford that yield? Because there's a reason, because it's high yield. And as you can see here, this is the free cash flow. This determines free cash flow determines if the company is able to continue paying out the dividends. And you can see here, free cash flow very much covers the dividend. It has a payout ratio of 60% of free cash flow for the dividends, based on 2020 expected earnings of $3.46 free cash flow, compared to the dividend of $2.09, and for 2021 60% as well. So we go back, so we see that the dividend is very well covered here. So let's look at the adjusted operating earnings again. And you can see here, blended adjusted earning yield of 11.4 is very attractive. You like to see this at 6.57 and higher. The higher the better. And 11.4 earnings yield is very, very attractive with a very nice dividend yield. The only thing I don't like about the dividend for AT&T is that the dividend growth is pretty, mediocre at 2%, more or less. So the most recent increase was 2%. And you can see, but that kind of keeps up with inflation. So the most important thing with buying AT&T shares is the price. Buying it right now with a nice 7% yield with a 2% dividend growth is very, very attractive, with also 11.4 earnings yield. So as you can see, the 22.9% total annual return of expected annual rate of return is very, very attractive. The company is a triple B S&P credit rating, which is investment grade. The long-term debt to cap is reasonable at 47%, but with the sale of the DirecTV, this should decrease that very nicely. Let's look at how accurate analysts has been with projecting earnings or future earnings. And you can see here the 1 year forward earnings, they've been pretty spot on at 73%, and AT&T beat it 9%. So I'm very confident with the 1 year, as well as the 2 years. You can see here 82% hit. So these earnings, it's very positive that they're going to come to fruition. And if AT&T goes up to that point of around 12 PE, you're looking at very nice return here. And if we look back at the total past 20 years, you can see whenever it was really under the orange line, it was a great opportunity to buy. You can see here these were good opportunities over here, and then it reverted back to the mean, and it became overvalued at a 16 PE. And you can see here 15 PE. So anything over 12 PE or more looks to be fairly valued to overvalued. And you can see here I made the my last video around this time period right here, and it had a nice run up to the beginning of the year. It went up 42 or 20% since that video. But since economic shutdown, the COVID, and things like that, the price dropped tremendously from the beginning of the year to the very low. It went down 25%. So as you saw earlier in the Google finance. So right now it's a very attractive price. At $29 a share, you have a great future expansion in the PE multiple. You have a very nice earnings yield, a great dividend yield, 7% just to hold your money. So basically, if the company stays at $29, $30, $31, $28, you're still going to be making 7% of your money every year, and it grows 2% every year as well with the dividend growth. So it's very attractive currently. This is why AT&T is one of my biggest positions. Right now I have a price basis around $30 or $31, so I am down. I'm personally not going to be buying more shares because it's a very, very big position for me, and I'm very happy with my current position. But if the company goes down to $28 to $27, I think I'm going to start buying more. But right now, definitely $29 is very attractive for those who are thinking about buying more AT&T, or don't have AT&T right now and thinking about purchasing. I think right now is definitely a good time to open a position and maybe even add more shares to your current holding, as long as it's not your biggest holding, over 10% of your portfolio and stuff like that. Right now AT&T is about 5% of my portfolio, so I don't want to grow it any higher than that. So that's why I'm personally not buying. But if it was lower than 5%, I think I'll definitely be buying at current prices. But like I said, if it drops to $27 a share, maybe 28, I think I'm gonna have no choice but to buy, because this dividend yield is gonna be almost at 8%, and that's gonna be tremendous there. So there you have it. AT&T is very attractive right now at $29 a share. That yield is very tremendous. Me personally, I'm not buying more shares because, like I mentioned, it's about 5% of my portfolio, and I like to keep it a little lower than that. But if it does drop to $28 or even $27, I think I'm gonna buy more shares, maybe another $1,000 worth of shares. But if you're new to investing, or you don't have AT&T and you're thinking if it's undervalued or you should be buying, definitely right now is definitely a good price to buy because of the low valuation, high yield, and the dividend is very well covered. So there you have it, and thank you for watching. If you're new to the channel, make sure to hit that subscribe button, and if you like the video, hit that like button as well, and check out my free ebook in the description below, and I'll see you guys in the next video.